Welcome back to the Wall Street Podcast.
Today, we're zeroing in on a recent Goldman Sachs research report covering Baidu.com, BIDU. It came out September 19th.
Right. The title is Unlocking AI Accelerants and Untrapping Balance Sheets. Raise TP, buy. Pretty clear signal there.
It confirms a buy rating, yes, and boosts the 12-month target price significantly. We're talking $154.
Okay, so let's unpack that. The core idea isn't some turnaround in the old search business, is it?
No, not at all. It's a sum of the parts revaluation. Goldman's focusing on really three things: AI cloud, Apollo Robotaxi, and unlocking that big cash pile.
A definite pivot in focus then. Let's break it down. AI cloud, first US $72 per share contribution. That's a major part of the valuation.
It is, and they've raised the target multiple there from 3x price to sales to 5x PS.
That seems, well, aggressive.
Yeah.
What justifies that kind of jump?
Goldman's argument rests on Baidu's full stack capability. Think self-developed chips like the Kunlun P800, right up to the AI software layer Wenku NetDisk features.
So the integration is the key differentiator.
Exactly. It supports higher margin recurring revenues. They forecast non-search hitting 54% of core revenue by 2027, and cloud alone driving 36% of that.
With sustained growth above 20%.
That's the projection, yeah, and aiming for a 10% EBITDA margin within 2 years.
Okay, moving on. Segment 2. Apollo Robotaxi. Only contributing US $23 per share. Seems smaller compared to cloud.
Well, the unit valuation itself was raised to about US $8 billion. It's based on faster fleet rollout. They're aiming for 2,500 cars by the end of this year.
And the path to making money there.
It's about scaling efficiently. The lower-cost RT6 car, under $30 BOM, is crucial. Plus, using asset-light models, cooperating with partners, maybe even internationally.
Like Uber or Lyft partnerships, perhaps?
Could be. The report mentions cooperation with mobility service providers.
Got it. Now the third piece, maybe less exciting, but financially huge. Net cash. US $81 per share contribution.
Massive, right. And it's now reflecting the full US $22 billion value of net cash and investments.
But for years, that cash was seen as, well, trapped on the balance sheet. What changed?
Management's stance seems to have shifted. To be more proactive, signaling enhanced buybacks, maybe even dividends. The market's noticing.
So they're finally addressing that skepticism about actually using the cash.
That's the interpretation of the report, yes.
Yeah.
Unlocking the value.
Let's dig a bit deeper on that cloud valuation, the 5x multiple. What specifically makes it comparable to peers commanding that kind of premium?
It boils down to the proprietary tech stack driving high-margin recurring revenue. That integrated setup supports a specialized GPU-based cloud business.
And that recurring part is key.
Absolutely. The report notes over 50% of their enterprise cloud revenue now comes from subscription and GPU-based services. That's stickier, more software-like.
Makes sense. Now, for robotaxis, beyond just adding more cars, what's the actual strategy for profitability?
Well, the unit economics on the RT6 car itself are getting close to break even, at least in dense areas.
Okay.
So future profit really hinges on expanding that asset-light model, working with mobility providers, and going international. Markets with higher potential prices per ride.
Higher ASPs, right? And finally, that huge cash reserve, US $81 per share. What are the real swing factors that could make the market fully believe in that value?
It's all about visible action. The market wants to see that cash deployed effectively.
Meaning?
Either smartly invested back into the business, like high-return AI capex for chips and cloud infrastructure, or returned directly to shareholders via stepped-up buybacks or dividends. Either path proves it's working capital, not just sitting there.
So, translating this for the general public, what are the takeaways impacting daily life?
Two main things, I'd say. First, you'll likely see more useful AI features integrated into software you use daily, like Wenku or NetDisk, making them stickier.
Enhancing digital work and learning tools.
Exactly. And second, the faster rollout of cost-effective robotaxis, like the RT6, signals that this isn't some far-off future tech anymore. It's getting closer to being a real, accessible mobility option.
A near-term disruption in transport costs and access. Okay, that brings us to a final thought. The report highlights the cloud valuation ranging from 2x to maybe 6 or 7x PS in bull-bear cases as the biggest variable. So the question for you listening is, how quickly will more transparency, more disclosure on GPU use and subscription growth truly solidify the market's view of this potential new core business? That clarity might be the real catalyst here.